Good morning. This is Larry McMillan with a stock market update on Monday, March 8th, before the market opens. Well, we certainly entered a very volatile environment. The S&P is probably in a trading range. The overhead resistance from 38.70 on up to 39.50 has still been very strong, and I would expect that to continue to be the case. We do have some near-term support at 37.25 or so, which is where we bottomed out both on Thursday and Friday. We've had several 100-point moves already within this range, and the range does extend on down all the way to 36.30, so a retest of that area is not out of the question. A failure at that area would be bad, though, because breaking the December lows would probably indicate that we're in some sort of a bear market. But right now we're in a trading range, and it's a pretty volatile one. The equity-only put-call ratios are on sell signals. They've begun to move higher and rapidly. And even this Friday, when the market was up a lot, the CBOE equity daily put-call ratio was 60. That's much higher than it's been all along. So there is some put buying coming into the market now. Brent has first swung very heavily to the negative side, now has swung back to the other side, and technically registered a buy signal on our Brent oscillators. So that's one short-term positive, perhaps countering out a little bit of the negativity of the put-call ratios. New highs versus new lows has been pretty interesting. New highs have stayed ahead of new lows, even on the worst days. It's been close. I think it was last Thursday. There was just a couple of different, new highs outnumbered by just a few issues, but they've still kept their lead. New lows have increased in number. That's to be expected. I think that we've come off these highs. So really, if we do get new lows exceeding new highs, that would be a sell signal, but it hasn't happened yet. VIX, meanwhile, spiked up last week and back down again and gave us yet another VIX spike peak buy signal. So they've been pretty good in general, not super strong, but they've been registering small profits. And so that indicator is back on the bullish side once again. Finally, we have the term structure, the construct of volatility derivatives. That has remained bullish. The April VIX futures have traded above the March VIX futures, and that's positive. And as long as that continues to be the case, that's a definite indication that we're more in a trading range than we are in, let's say, heading towards a bear market. So, all in all, right now, the indicators are still a bit negative. I wouldn't be surprised to see the market head back down and try to test support again. And as long as that resistance is overhead, there's going to be a problem getting through there. But a move above 39.50 would clear everything out for the bulls. So we could be in the process right now of just regenerating, creating a little bit of oversold conditions, maybe moving things like the put-call ratios higher, so that eventually they can give a buy signal somewhere down the road. So right now we're still remaining short-term bearish, but we have taken, for example, the VIX spike peak buy signal. So we're trading signals from both sides when they are confirmed. I invite you to visit our website and check out our newsletters where we follow all of these things daily. So meanwhile, good luck and have a great week trading.